give me a second here to get this set up, and then we'll start the recording, and then we're on the way. All right, just logging in. I like to do this at the time so the recording doesn't have all the music in the background there. Just give me a second here to get this set up, and then we'll start the recording. Right, there we go, live streaming on YouTube, all around the world. Yes, get 3 or 4 people there too. Just kidding. Okay. All right. One more button to push. One more button to push. Uh-oh, where's the push? Pause recording. Did we not get the recording? Pause recording. Hang on. Say, why is this not recording? Is this recording? Resume recording. Resume recording. Okay, I'm not really sure it's recording here. I did not hear the sound saying that we are recording. Why would that be the case? But it looks like it is. So, all right, we'll take it for what it is. Good evening, folks, and welcome to another edition of Weekend Review. And my name is Hugh here. Day Trade Spy. First and the last. That's the only thing you need to know. If you want to make money, you're in the right place. If you want to learn all about the stock market, we're not going to give you that. You can learn that on your own. You can use this. That would be like joining a university where you never graduate. Market's always changing. Never. It's never going to be an end. But if you want to learn how to make money, we are the place, right? And my name is Hugh, and it is Sunday, March the 23rd, 2025. Excuse me. Please use the questions box for any questions or comments you might have. You will find the Zoom, rather the questions box little icon there on your dashboard. Just click on that. I am the only one that sees that. Yes, we are going solo. I give John the night off on Sunday nights. Let him be with his family and stuff. And excuse me, he does the Wednesday night sessions. All right, we got a little deal going here. I do Sundays, and he does Wednesdays. All right. Okay, so I guess you guys heard the recording. Well, maybe it's just my end. Anyway, doesn't matter. All right, I'm gonna give you a few seconds to read the disclaimer. Keeps us out of jail. So just go ahead and read that. I think you know what the answer is here. All right. You alone are responsible for all your own trading, and past performance does not guarantee future results. You get this disclaimer on every one of these webinars, and you guys ever read, those disclaimers, those terms and conditions? Yeah, does anybody ever read those? When you go to a website or you buy something, terms and conditions. Um, It's funny, I got to tell you. By the way, these Sunday night sessions, you get a lot of anecdotes and stuff, and different stories and different things, and it's not just all about trading. But I got to tell you, when I think of this, I had to laugh. Last summer, we wanted to hire a maid for our house, all right? Somebody to come in, once or twice a week or whatever, and just clean up a little bit. Nothing big, no doing windows, nothing like that. Just come on and do whatever. And I had to laugh. Before she came. She 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 sent her terms and conditions email over that we had to read and sign. I said, "Okay, we're not doing this. We're not doing this." The cleaning lady's got her terms and conditions. I couldn't believe it. I said to my wife, "Forget it. We're not going down that path. How about lady, you come over, clean the house, we give you the money, and off you go. We're done. We're done." It was hilarious. Okay. I've got people checking in. Let me know where you're checking in from, folks. Fort Lauderdale. Good evening, Jackson. And St. Louis, James. Good evening. Let me know where you're checking in from, folks. Let me know. We just came back from Florida ourselves in Wilmington, North Carolina. And there's Pikeville, North Carolina. Richard, thank you. I love North Carolina. Yeah, we stayed there for a couple days. And Cincinnati, Ohio. Falls Church, Virginia. Virginia is such a nice place. I love that area. Rome, Georgia. Let me ask you guys, they say there are black bears in that area. Is that true? Sometimes I think my wife is pulling one over me. She says, yeah, she read that there's bears out that way. They don't hibernate because it's too warm, right? Rome, Georgia. Houston, Texas. Okay. Putnam, Connecticut. Richmond, Virginia. Okay. Ponte Vedro Beach, Florida. Was on vacation in the Keys. Okay. Georgia. Okay. Montreal, Quebec, Texas, Raleigh, North Carolina. That's a big area for us there. That North Carolina, Georgia, Florida area. Collingwood, Ontario for Larry on that one here. Okay, Robert P. A little north of Rome in Blue Ridge Mountains. And yeah, people ask me, where'd you go to school, Hugh? I say I went to university at that school just outside of Rome, Italy. Really? Oh yeah. What's the matter, you? Oh, Colorado Springs, Colorado. Get it? What's the matter, you? Hey, what's the matter, you? I try to do the Italian accent. I can't do it. I got lots of Italian friends. One of my best Italian friends told me this. I just about fell on the floor laughing. Anyway, let's move on. Here we are. How's my hair? I got my hair cut there a couple weeks ago, and one of my morning, is she on? Where's that lady? She said, "Your hair's getting long. You get a haircut." Maybe it was last week. She said, "Who is she?" I don't even know who she was now. I don't know. I gotta love the women online here. They keep me in line here. They uh, they keep me in line. Okay, Diorani, Toronto, Canada, but currently in Orlando. Okay. Richard, yeah, what's the matter, dude? What's the matter, dude? Okay. All right, let's move on here. Here's what we're going to talk about tonight. We're going to talk about last week. Talking about last week. Going to talk about the upcoming week. Give you a little bit of a tutorial. Answer your questions and whatever else we can throw in here to kill an hour. You know, Listen, you have any questions? Put them on the board there, right? Am I going to teach you Maryland? Maryland, what else we got here? Yeah, Rati, we call it the School of Hard Knocks. Yeah, that's where I was. That's really where I was from, the School of Hard Knocks. Okay, and some of the stuff, I remember. I don't know what triggered these stupid memories, but back in my old naive days, younger days, I didn't know too much. I always thought dumb things, but things like you have a stock market, you have a meat market, you have a fruit and vegetable market. But when I was a kid, I always thought a flea market, it sells fleas. Why would anybody want fleas? I don't know where that triggered that random thoughts, random memories, random memories. And of course, the one time I made a fool of myself and went down, I think it was AutoZone or somewhere. I was waxing my car. I was rubbing like crazy. And these young girls, I think she was about 15 or 16 or something. She comes by, say, "Hey, Mr. Hughes," she says, "Yeah, you need some elbow grease for that." Ah, elbow grease. You know what? I'm gonna run down to AutoZone and get some elbow grease. Don't ask that question anyway. They laugh pretty hard, but anyway. All right, who am I? Why should you listen to me? Maybe you shouldn't. After somebody who hasn't made a fool of themselves in their early years. There's another one, Gig Harbor, Washington. Alicia, oh, nice to have you here. All right, what did I do to deserve? What did I do to deserve you, the viewer, listening to me, the guy out there in Western New York who's was talking about stock trading? Well, I'm pretty successful at trading options, and I wasn't always that way. Okay. In fact, I should have brought up a picture, but I'm very humble about it. I don't like to tell people this, but back in my early days when I used to be a corporate America employee and I'd work hard and hand over a lot of my money to my financial advisor to invest in my future. It was quite some time before I realized, I opened up an envelope one day, realized half of my capital was gone. Was not very impressed, and I called up my buddy Mike there, and we're all buddies, right? Well, oh yeah, Mike's gonna take care of me. Oh, my future. Oh, he'll take care of me, right? Yeah, right. I had some words with him, and I seized control of my own account. I seized control, and I said I got to learn how to do this myself. Excuse me while I'm just kind of blowing my nose. Hold on a second, folks. Sorry about that. just getting over a cold. Actually, we spent the last week in Florida under the weather, if you can believe it. I think it was allergies. But anyway, I seized control of my account, figured out I have to learn how to do this myself because I remember there was a while there. I like to say a few days, I don't know how long it was, but I resigned to the fact that in my retirement, I may be pouring coffee at my local coffee shop if they'll have me. That's how bad I got. It was not good. But but I will not accept the fact that my kids are going to go to any substandard school or or no school or send them out to work. One of my best friends at the time, his name was Glenn. He was all for education and everything else, but he had a different vision on life. He for some reason he thought everybody should support him because he is Glenn. I don't know what, but he was in radio and he was smart and whatever, but not smart enough to take care of his own family in some ways. He was very very creative, but he couldn't put a loaf of bread on the table. And I remember he had two sons, and they ended up having to go to work. They never did go to college that I knew of, anyways. But I said, I am not going to have my kids not complete a good education. So I'll do whatever it takes. I will learn and I will master stock trading because I always knew there was money in this business. I saw it. Every day I would look at charts and I would look at, anyway, I would look at the ups and downs, the lows and the highs and different things, and started with equities and then looked a little bit at penny stocks and different things. But, you know, futures, commodities, you name it, Forex, oh, don't get me started there. I lost a good chunk of cash in Forex, let me tell you. But I discovered options, stock options on the S&P 500 SPY. This is the stock that follows the top 500 stocks. Wherever the economy goes, basically, that's where SPY is going to go. And you don't need much of a move in SPY in the stock to make some pretty good money on the market, which I'll show you a little bit later on. In fact, I'm going to show you my trades this week, okay? I'll show you my trades this week. But anyway, I discovered this and I started making some pretty good money on the market. And I remember it was really cool because things turned around pretty quick for me when I realized that, okay, I think I'm onto something. And other people realized it. And they started noticing, that, oh, my fortune has turned around. I'm doing very well. What are you doing here? They would say, what are you doing? You win a lottery or something? And my son and daughter, for a while there, I wasn't really sure what I was going to do. They needed a car, and I needed another car. And anyway, um, one day I'll show you the picture. I ended up buying two Mercedes, one for my son, one for my daughter, for their schooling and stuff. But anyway, I don't want to go down that path. It was a time when I surprised the heck out of them, and did very well in the market. People started noticing. They said, "Okay, what are you doing? You got to show us." My friends, family, neighbors, associates, everybody said, "You got to show us what you're doing." Okay, sure. I would downplay it. I said, "Well, I don't know." Well, no, 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 no. You got to show. They coerced me into putting it up on a website. So we got a very rudimentary kind of a website. And they started. I thought, and I said to my wife at the time, "Oh, don't worry, this won't last. It'll fizzle out in a month. It'll all go away." But it didn't. It didn't. In fact, they got their friends and their friends and their friends, and before I knew it, this thing mushroomed and ballooned. And before I knew what I was doing training. We started our inner circle. We are doing live trading room and ebooks and one-on-ones and all this stuff, and it ballooned into a real full-fledged business. No longer was I in the corporate America world, but I was doing this, right? Anyway, I look for short-term breakout trades. All right. My favorite is scalping. All right. Make a little bit of money, on each trade. Not a lot, a little bit of money on each trade and do it multiple times a day. And it's not that difficult to walk away with $1,000 or $2,000 a day when you do it like that. And it's a lot of fun. That's what I like about it. It's a lot of fun. All right, anyway, I'm going to move on. So I think I know what I'm doing, is my point. Okay, after years of doing this, and a lot of learning and struggling, and with a lot of my a lot of my losses. Whenever I had a loss, here's what I did. I would always learn, go back and learn. What did I do differently? How was this trade really good yesterday and today it's not? What happened? And that's what I would do. So, and I would incorporate those lessons into my future trading. And you know the funny thing? When you stop doing all those things that are not working for you, not making you money, but giving you challenges and losses and stuff, when you stop doing all those, what's left? The only thing that's left are those things that are making you money. So just keep doing those. And don't always keep looking for the next big thing. When you found what works for you, stay with it. And I say this even if day trading spy options isn't your thing, that's fine. If you find something better, go with it. And believe me, I checked everything that I know of. I mean, yes, I did the Qs. I found the Qs were more volatile when it came to the tech sector because they're really top heavy with the techs, and the techs are overvalued. And whenever something would go wrong, the tech sector was the first to get knocked out, and there goes the Qs. Anyway, I started writing a newsletter. A couple of years ago, we got bought out by Eagle Financial Publications. They asked me to do newsletter every week. Sure, no problem. So I do. It's about a 3 minute read, just a very brief 3 minute read, very light, relevant, even entertaining. We touch on a lot of personal stuff in there too. Just a little very brief, a few things. This week's topic, every week is a little different topic. Is it a retracement or a trend reversal? You ever look at a stock and it goes back and you say, is this a retracement now or is this a trend reversal? How do I know? How do I know? How will I know? Right? And um, and yeah, I mean it's important because if it's a trend reversal, right, you can get in on that, buy some options going in that direction. But if it's a retracement, well, that could be a setup for that other way. Anyway, we'll talk about that a little bit in the newsletter. Watch for it. Now, how do you get this newsletter? Very easy. Just go to our website, daytradespy.com. When the pop-up comes up, enter your email address and you'll be on that list. Okay, you'll get it in your inbox every Thursday, usually Thursday mornings. By the time I get up, it's there. Might be more or less. It depends, I think, on when they send it up. Not really sure. You can also go back and see all the past issues. We've got about a year and a half worth of this stuff here. They're actually really good. They're really great issues. Go to the website, daytradespy.com, and up at the top left, you'll see Spy on the Market newsletter. And go back there and you'll see all those newsletters. They're all stored there, and I think you'll read them. I know several people who've told me that they get those. As one guy, oh my gosh, I thought I was gonna just, I thought, yeah, man, you're crazy. He says, oh yeah, I went back, I discovered they're really cool, and I went back and every single one of them I downloaded and I printed them off and I got them all in a binder. And he sent me a picture of this binder full of, actually, there's two binders. One from the first year, he's got them all filed by year, So the first year and the second year, he's got them all there. And I thought, wow, that's pretty cool. He said, oh, I love them. He says, I love them. So anyway, Spy on the Market. I write that and go check them out. All right, let's take a look and see what happened this last week. Take a look at this chart. Talk about some wild swings. Is the market going up, down, staying the same? What is going on here? And let's just expand this a little bit here and just see what happened. Well, Monday we had some retail sales reported lower than expected. They pushed SPY through 569 to recover much of the recent losses that we had. Okay, so and this is what happens. See the when the news, all right, when the economic news is anti-inflationary, that's good for the market. The market doesn't like inflation. High inflation means that interest rates may go up. So it's a bit of a threat to the market. It's all about interest rates. It's really all about interest rates. And so when the news is anti-inflationary, the market goes up. If it's inflationary, of course, the market likes to go down. But we did recover much of the losses from a couple of weeks ago, and actually we changed the course. We got into a reversal here, and well, anyway, we'll talk about that in a little bit here. I kind of forgot the term, and it'll come to me tomorrow in a few minutes here. On Tuesday, we had above forecast building permits and housing starts reports. That was inflationary. That pushed the market down. Of course, there's more talk about tariffs. tariffs and stagflation. Stagflation is when you have good employment and inflation all in the same, and it's like, oh, okay, now how do we do this? SPY took out 7 points pretty soon on market open, and on Wednesday, as it was getting ready, we had the Fed Reserve rates. That was the big news on Wednesday, and of course, all of that entailed. Fed Chair Jerome Powell spoke and giving his comments and how he sees interest rates coming up in the future. Basically, he's of the opinion he's going to be more reactionary with the economy rather than proactive. You'd have thought he might have been a little proactive, perhaps maybe even raising rates if he sees inflation heating up. He didn't do that. He did not lower the rates. He kept it the same and had some comments to encourage investors. Rose SPY to close over the 568 level, and that stuck around there for a little bit. And then on Thursday, we had unemployment claims, the Philly Fed Manufacturing Index, and existing home sales. Well, that activated SPY, did some wild swings even in the pre-market. We ended up going back and forth between some major support and resistance levels. Had some Fibonacci lines in there, brought down by the Trump tariff talks in the afternoon. Trump likes to talk, and whenever he talks about tariffs, markets get worried. A lot of people don't like tariffs. I've been hearing things that nobody wins with tariffs. Nobody, everybody is going to suffer with tariffs. Let's open the borders, not put more barriers up. Like, come on, what's going on here? Anyway, the market got a little hesitant there, pulled back down, and on Friday we got back into a lot of technical trading, overshadowed by tariffs once again. Pushed SPY back to the 565 level, wrapped up a 12-point swing week, ending only about 1.5 points over the open. And it was triple witching day, which is probably what brought it back up. We had a lot of volume on Friday as various derivatives came to a close, an expiration, and the rolling over whatnot. So basically, it was a pretty wild week, right? Wild week of trading. So, but that's okay. It can gives us an opportunity to make some money. So. All right, looking at the seasonals. Here's a look at seasonals. That blue line you'll see at the top. That's where SPY is now. You can see it came down pretty good here from. Well, I don't have the numbers here, but well, we had those weekly numbers. But the red line at the bottom is a composite of the last 5 years closing price on the daily charts. And if we zero in on that historically, SPY dropped only about 1 point from last week. That major drop that I showed you a couple of slides ago, that was from a couple of weeks ago. So we made most of our drop here a couple of weeks ago, and last week historically only went down about 1 point. And historically, over the last 5 years, we rose about 6 points in the following week. So not to say it's going to happen again, but it kind of gives us a bit of a barometer to see, well, maybe we can flatten out and go back up. We'll see what happens. Excuse me, last week, Fed Reserve, of course, left rates unchanged as expected, and they still predict 2 rate cuts this year. That's kind of nice. I remember several weeks ago they're talking about three possible rate cuts. So, excuse me while I clear my throat here. Apologize for that. We're actually we had some pretty bad strep throat in the last few days, and kind of getting over that. One of the ways to get rid of strep throat, I think, is to stop talking, and that's almost impossible for me when it comes to the stock market. So but it was really nice. Spent a lot of time out by the pool and just vegged out there for a few days. My wife is saying she's ready to go back to Florida, so I don't know. We still might go back. Anyway, we'll see what happens. Stocks pulled back from February's high, but recovered from correction territory. That's the term I was looking for. That last little while, we're actually in this correction territory. That's where they drop what 10% off the recent high or something. But it looks like we pulled back out of that, back out of this correction territory. Growth is there's still growth, but it's slowing, and the labor market remains healthy, and manufacturing is improving. So in this funny kind of a situation here, and there's a lot of uncertainty remaining. That's an issue. They say that uncertainty is as bad, if not worse, than the tariffs themselves. A lot of people, a lot of companies are trying to determine, well, what do we do with this tariffs problem? You know, who absorbs them? How bad is it going to be? Um, tariffs. Trying to anticipate the numbers, things that are think that how bad our sales going to be after tariffs are imposed. I was reading an article the other day about maple syrup. Canada supplies about 85% of the maple syrup in the States. World leaders in Quebec. It comes from the forests in Quebec. You need that cold weather. You cannot take maple syrup manufacturing to Florida. Okay. The reason is because the trees have to freeze and then they thaw out, and the syrup, the sap comes from the trees, and they do with it whatever they do, boil it down or whatever. That's where you get your maple syrup. But if they were to impose, this is what the article is about. They're trying to anticipate all this. If the U.S. is imposing a 25% tariff on maple syrup, how elastic is the price? In other words, are people going to pay that much more, which is already an expensive item? This is not something that, you drink like like beer or something. No, it's a pricey commodity. But they figured out that the average, how was it? The average, they don't like people don't buy so much of it. The average person goes through about 1 quart or possibly a liter. I can't remember if it was in liters or quarts. Same idea roughly, a year. So if you have an average household of 4 people, you may go through 4 quarts of maple syrup in a year. So this is one of those items that, well, you're not going to be so price sensitive because you're not buying a lot of it. And they're wondering if they raise the price of maple syrup by 25%, are people going to stop buying it? And these are all the things that they have to anticipate. And they have to anticipate this because they have to determine production levels and storage levels, and the people that farm this stuff, they only get paid when they sell this stuff. Anyway, there's a lot of complications in these supply chains. That's just one commodity. Anyway, we're looking at continued lower interest rates expected to help the economy and corporate earnings. This here chart talks about the Fed's remaining on track to continue cutting rates through the pace, though the pace has slowed. That gold line is the personal consumption expenditures. It's a key inflationary indicator that the Feds use to determine whether they should raise or lower or keep rates the same. That blue line is the Fed funds rate. Came down here after topping out here for the last, what, year and a half, 2 years or whatever. It's come down a bit. Those X's, the blue X's, that is the dot plot, overall dot plot average. So they anticipate where rates are going to go for the next 2, 3 years out. And the gold crosses, X's rather, are where they anticipate inflation to go. Obviously, it's just a projection. They don't know for sure. That red line at 2% is where they expect inflation to be. They really want inflation to get down to that 2% level. That's what they're working towards. And if this can carry on, then everything's good. But they don't know what's going to happen with the uncertainty out there. So that's kind of the idea. And that, of course, was last week. So, all right, here's what the S&P and the other indexes or indices did last week. S&P rose 0.5%. Nice little break from that minus the last couple of weeks, 2, 3 weeks, 4 weeks. Rose 0.5%. Year to date, we're down 3.6%. Could be worse. You could be trading the NASDAQ, the Qs. You'd be down 7.9%. Year to date, they rose 0.2%. The Dow, or rather, yeah, it was the Dow that I guess took the better hike this week. They ran up 1.2%, and they are only down 1.3% year to date. And that's what the weekly market stats look like. All right, I'm going to ask you a question just to get a little interactivity here, folks. I'm going to do a poll. I've started this poll here, started becoming quite popular here. Do you figure you are better off now than you were 4 years ago? Uh, with different administration here. Let me know what you think. Better, worse, don't know. I'm suspecting there's going to be a lot of don't knows. And okay, here they are. They're coming. Okay, let's see. We're gonna get a whole whack of let me see, whole whack of comments. I'm just curious. The poll is nothing more than just a 2 cent kind of a poll, just a very brief thing. Nothing formal about it or official. Nothing at all. Okay, worse, better, worse, same. Better, better, worse, don't know better. Wow. All right. Yes, better, better, don't know better. Yes, better. Worse is everything is more expensive. Okay. Uh, I like Douglas's comment here. He said, financially better, unrelated to political leaders. Worse, personally, as my kids have all moved out. Douglas, you raise them to be independent, and damn it, they are. They leave you, right? Better, Alexi, much worse. Worse, don't know. Worse in Canada. Ronnie, thank you for that. I hear a lot of that. Actually, I hear a lot of that. A lot of Canadians are moving to the States. I read a report there the other day too. Oh my gosh. A lot of Canadians. They have this thing called brain drain. All the smart people are moving to the States. Doesn't leave a lot for uh I don't want to go there. It doesn't leave a lot for I guess good leadership. I don't know. Don't know, not enough time yet. Much better. Much better, better. We'll get better. Better, getting better, better. Wow. Okay. All right. Whoa, some shots against the orange idiot. Okay. Okay. Personal finances, yes. Politically, no. Don't know. Don't know. Worse. Wow. All over the map, folks. That's all over the map. My gosh. Okay. Well, that gives you an idea. And yeah, yeah. I mean, there's some things better and some things that are maybe worse. So anyway, we'll see what happens. So, all right, week ahead. Monday, tomorrow, we got the S&P Global Manufacturing PMI report and also the services PMI report. These are key inflationary indicators. So we'll take a look and see where that's going to move the markets. Tuesday, we've got consumer confidence. Sorry. New home sales, Richmond Manufacturing Index, durable goods orders on Wednesday, unemployment claims, final GDP, and pending home sales on Thursday. And on Friday, University of Michigan personal consumption expenditures, personal sentiment, inflation expectations. University of Michigan consumer sentiment and inflation expectations. Personal consumption expenditure. This is the key. This is the key inflationary indicator that the Feds like to use. Okay, that's their key inflationary, which really surprises me that they have their rate announcements before they get their personal consumption expenditures report. You would think that they would be looking at this report, right, before they would make their rate announcements. And we're only talking about a few days, but I've noticed they do this a lot. Um, and I'm not really sure why. Why would not they not wait? But I don't know. They didn't ask me on this one, so but there's a comment that maybe they're getting their report earlier than the rest of the world. But I would think if that's the case, these numbers would leak out, and you would see all kinds of market reaction to that. So I'm not thinking that it's leaking. If it leaks out, it just leaks out by a couple minutes or a few minutes or something before the report, but nothing major. So, but anyway, we'll see what happens. Let's take a look at the volatility. High on Monday, Tuesday, and Wednesday, medium. High again Thursday and Friday with these reports. The other thing is this: we see a lot of same day scheduling of President Trump talks. Okay, whenever he wants to get in front of the camera and talk about his executive orders, we get sort of a same day announcement. You can usually expect volatility increase whenever he speaks. And that's all the more reason to day trade options on SPY. Get in for that short-term gain, right? Short-term gain. Make your money, get out. I like to have cash as my default position. Cash is my default position. I know a lot of guys, I was talking to a couple of guys here in the week. Um, we were by the pool discussing this about how they like to keep their money in mutual funds. And I said, that's great. I used to do that too. But then you get into some recessionary times, depressions or whatever happens. Excuse me. And then your mutual fund account, dives. It doesn't just drift down, it dives down like real fast. If a lot of these funds, which a lot of them are, say they're tracking the S&P or wherever you are, right? Even if you're diversified, if that whole, if the whole fund goes crashing, you just wiped out. One guy complained, he says that he lost 22% of his funds in the last couple of weeks. And I said, well, that kind of hurts. He said, yeah, it hurts especially bad because he said, I'm 82 years old. I don't know if it's going to come back up or not, or what am I supposed to do? Wait? How long am I supposed to wait? So, I don't want to say too much, but, well, you might as well hold on now, right? And see where it goes. If it comes back up, great. But I probably want to, I don't know. I can't give advice. I know that when I held money in mutual funds and the market turned on me, I felt very cheated, as if the money is taking my money, the market's taking my money or whatever. But or if it was being mismanaged, I didn't know. Didn't matter. But I hate to look at my account and I've got X dollars in there, and then I look at it a couple weeks later and it's X minus 20%. You know what I'm talking about? Anyway, I like to keep my money, a lot of my money in cash and or money markets. Money markets. They don't pay much, maybe 5% money markets, but at least you can take the cash and trade it, right? You don't have to trade a lot. You can take five, six, $8,000 a day and trade it and trade it and trade it, right? And walk away with $1,000, $2,000 a day for living expenses. All right, I'm going to give you a 2-minute tutorial right now, and I'm going to talk about how to remove candles in Thinkorswim. This is a question that came up the other day because I corrected the candles. And I have some people who are new to Thinkorswim. They say, how'd you do that? So, and why would you want to do that? Okay, well, let's look at the whys first. So every now and then you get an outlier trade. You get an outlier trade like this here. Look at this. Back on this day here. I mean, this was after hours, but it could be any time. You see this a lot after hours, but even during the hours, it doesn't matter. Even after hours. Here's a time when at this point here, on this particular trade, this day here, where did it go? Where did it go? Oh, did we lose it already? Oh, when I zoom in or out, all of a sudden everything just kind of crashes on me here. There we go. Let me expand this. So the market's, chugging along right here. The price is down here. I've got the price on the right, right? The price for SPY, the stock, is sitting around 567, 567, 20, 30, 40, 50. The price is in this range here. Price is in this range, right? Um, and and it really is. It's not, it's not way up there. Some people say, "Oh, there's a mistake." Well, it's not a mistake. What it is probably a market order that needed, one more share or two or five or 10 more shares. And somebody had a share way up there, market order, and grabbed it on this guy, right? Poor sucker who paid $586.86 for the shares when the price is really down here at 567.70. you know. But somebody got roped in for that, right? That's why I don't like to use market orders. If you use a market order, right? Use a market order, you could get caught up in this. Imagine if you had a market order, say a buy order, and you needed that extra share for whatever reason, it runs up there and ends up, and you pay 567, 77, almost $20 more per share. Nothing you can do about that, folks. You can't call your broker and say, hey, what was that all about? Well, sorry, sucker. You used the market order, right? Yeah. Oh, yeah. Anyway, the point is, those outlier trades can skew your indicators. And I don't care what indicator to use. Indicators are all really historic and they go on price, right? They all go on price. So if you're using an MACD, a stochastics, if you're using moving averages, anything at all, that outlier trade over there, well, let's take a look. Let's actually install studies. Let's install a moving average, just to give you an idea here. A moving average. Okay. And we'll see if moving average, I don't know, how about an exponential here? Exponential moving average. All right, we'll just throw this one in there. We'll see where it goes. I'm not really sure if this is going to be shown up as, I suppose, I know. How about a MACD? I want to get on a different chart as well. I want to go on a chart underneath. So let's do an MACD instead. MACD, two lines, MACD, two lines, install that. There we go. We got the MACD down there, right? And let's zoom out. Where'd that line go? Oh, okay, now I gotta go find it again. Okay, this is it here, right? So we have, and I'm gonna get this out of there. So we have these outlier trades, picks it up there, and you can see how it would move the indicators. Maybe not so much on the I'm trying to adjust this line here. Okay, if I move this up, I'm trying to show how the moving average, which is on the chart itself, you can see how it shot up. But if I want to take that line out, that candle out, because it's obviously not supposed to be there, and that candle is right there at the 1606 line, 6 minutes after 4. I want to make sure I got the right one, and it looks like it is. To remove those kinds of candles that you want out of there, put your cursor on the candle. Right click and click on correct this bar. Okay, hit correct this bar. You're going to get this menu item right here, this menu, and all you have to do is hit remove this bar. See that little button there? Hit remove this bar and then close. And what is it? 1606. If you go back and look at the time on the bottom here. We go from 1605 to 1607. There's no 1606. Not sure if you noticed, but the indicators changed a little bit as well, and you don't get that spike. Okay, you don't get that spike. Very easy again. I'm going to just go back and let me get rid of the studies so I can just show you exactly again how we got rid of that. Click apply and OK. And let's take a look at another one of these spikes. Here's another spike right here. If I find that this spike is, skewing my indicators, crowding my numbers charts, the price isn't up there. It's down here. Let's get rid of this. Right click, click on correct this bar, and you're going to get this little pop-up. You can also change the parameters if you really want to hold the parent parameters, but I don't see any reason for it. Usually I like to just click on, and here it is at 8 o'clock, right? 8 o'clock. Let me go back again here. Okay. See this can it is 8 o'clock right there in the bottom. Again, right click, correct this bar, and we are going to remove this bar, close, and here it is at 8 o'clock. 7:59, 8:01. That bar is now gone. Okay, very easy. So this is going to alter your pivot points, um, which takes me to the next step. Sometimes you'll see where your pivot points are different from your real trading charts, from your from your simulated trading charts, okay? If your pivot points are different, chances are that it's because of one of those candles. One of those candles is skewing the numbers. I don't want to say chances are because every time, 100% of the time that's happened to me, that is why. You may not get those spikes in your real charts, but if they show up on your sim chart, if you're looking at your paper trading account, you see that. Get rid of those spikes and you'll see that your pivot points come into line with your real charts. Again, right click, correct this bar, remove this bar, click close, and it is gone. Okay? Simple as that. All right. Let's get back to that's our 2 minutes. Did I go over 2 minutes on that? Okay, no problem, no problem. All right. Aren't these Sunday night sessions fun? You guys having a good time? Having a good time? I like to think of it as like a laid back. It's almost like a social thing for me, you know? I look forward to it. I know it's kind of one way. I mean, it's kind of two way because I get the interaction from the comments, but I mean, it's not like we can all sit in the sit in the lounge or something and exchange, freely exchange. I think all this actually started during the COVID days where we got into a lot of sort of laid back lounge. I think we had something I used to call it Sunday night loungers. I don't can't remember, but that's how we remove candles and think or swim. So we are doing this project here. Buddy of mine, well, not a buddy, he's one of our clients. He asked me there back in January. Hugh, I've got $5,000. I want to turn $5,000 into $50,000 in 1 year. Can I do it? I said, I think so. In fact, I'm looking to see maybe even $100,000. Let's take a look. So I'm not going to go back to January. I'm just going to give you the last few days here. What we had here in this chart shows you that blue line is the budget and the red line is the actual. There were a couple, and we're doing this in the trading room actually, okay? And I'll give you the rules in a little bit here, what we're doing. But this is sort of this is the log that we're using. I'm just tracking the numbers. I'm not actually putting in here which options or what I'm doing. But if I'm trading more than once a day, then I put the numbers on here. He is in a position where he can trade as many times as he wants because he has over 25,000 in his account. And the actual proceeds, a couple weeks ago here, we took some really bad hits. We took some bad hits here, and so we lost what about $5,500 in this segment here. So that put us down. And what happened was, of course, the budget kept going up. So now we're at the 240 mark. We're supposed to make $240 a day here, trading $6,000 now, right? Because we moved it up, right? And this last week in Florida, we did have some pretty good wins. We're edging up. We're edging up. We had some bottoming out here, but we are coming up. And I only traded, except for the one day when I did two trades, I'm basically trading one trade a day. Sort of doing a lighter version while I'm on holidays. But now that I'm, getting back into the groove here, back in my home office, I'll probably do two, maybe even three. I'll see how the market goes. If we have the moves prepared and ready to go, then we'll do them, right? But we're trading here $6,000. We're doing $6,000, and that's the rules. Well, here's the rules. All right. So number one, these are the assumptions. Where did it go? We're not inhibited by the pattern day trade rules. You can trade multiple times a day. So if you're in a cash account where you have that cash, or you have a $25,000 balance in your account, you can do this. We are not in a hurry. If there's going to be a day when I just don't see a setup, or I don't see the potential, or I don't feel like it, or whatever reason, right? Then I'm not going to trade. But I like to use scalps. I'm actually, I like to use scalps. Okay. I like to use scalps. I'm going to annotate. Let's see how this annotate works. What is this? Draw a path, vanishing pen, highlighter. Oh, about highlighter. So we're not inhibited by the multiple. There's okay. Well, that doesn't really work well, does it? I don't think I'm going to use that. I'm going to trash it. Clear drawings. I was never really good at using a mouse to draw things. We're in no hurry. I like to use scalps. I like the setup to be there, including the 10 EMA crossing over the 20 and the 105-minute chart. I like to use chart patterns. Where I see the opportunity, sometimes I like to jump the gun. I'm trying not to, but I do try to anticipate the news, longer term direction. So if I see, let's say tomorrow morning, let's say the market goes down in pre-market and it finds some support and then it goes back up a little bit and we get the dead cat bounce, right? That's where the market goes up a little bit. And dead cats don't bounce very well, right? They just kind of go thump and then maybe get a little bit of a move back up. But then it comes back down, possibly to test support. Maybe go down a little more, come back up. Now we're going to have an inverse head and shoulders, whatever. But at some point, that reversal will probably happen. And then when it breaks that neckline going up, that's when I'm going to get in and I'm going to ride it back up. I do prefer calls for that reason because I'm pretty good with those. I like to buy time. All right. I have not used 0 day expirations or even 1 or 2 days. I have been buying time. Now, Mondays and Tuesdays, I like to use same day Friday expirations. Wednesdays, Thursdays, and Fridays, I like to use the following Friday's expiration. So I like to buy time. Time is insurance. Yes, you can make a lot of money with 0 day expiration, but the risk is also great. If and when, I shouldn't say if, but when the market turns against you, they suck that premium out of that sucker like, oh my gosh, like no tomorrow. If you're waiting for it to come back, good luck. All right, good luck. And again, we're investing at this point, we're down up to $6,000 at the trade. We're doing that for 2 months, and we're going to go to 7,000, do that for 2 months, and 8,000, do that for 2 months. And we're going to hit our targets. All right. Upon hitting the target, stop trading, done for the day. Now, sometimes you do get on a roll, right? Sometimes you're just really at one with the market. So you can say, well, yeah, I still see an opportunity here. I'm going to do it again, do it again, do it again, right? But as a rule, I like to have a certain target every day. Hit the target, get in, make your money, get out. Again, I'm focusing on calls now. There were some trades this last couple of weeks when, you know what, we're in a really strong downtrend. The market's very precarious, very tenacious. It doesn't want to go up. It's in a bad mood. Okay, we'll take the call. We'll take the puts. We'll watch the puts. We'll not leave our post. Again, I'm turning 5,000 to 100,000. That's my goal. My buddy, actually, his name is John. It's not the same John that's in the trading room, but it's his thing. I'm looking to make some pretty good money for this guy. And of course, I left the rules open that they can change as conditions change. All right, so I'm going to tell you about something really special coming up. They do this twice a year, The Eagle people do this twice a year. It's called Day Trade Spy Society. Those of you who are members of this, you will know the benefits. The benefits are you get the inner circle, the day trade spy signal, the pick of the day, the trading room, lifetime membership, all for one special price. All right, plus a small annual maintenance fee, and just like nothing. And I want you to contact Grant at this email address for pricing. They will not allow me to tell you what the price is. Folks, they got me handcuffed. I got to get some handcuffs. They got me handcuffed. I can't tell you the price. In part because if you have a subscription to any or all of the other items, you'll get some sort of a rebate or a price adjustment on all that. So they have to look at your individual subscriptions and make the adjustment. And that's actually a big piece of it. But I can tell you that Day Trade Spy Society is a heck of a deal. Uh, when they told me the price, I shook my head. I put my head down. I said, "Are you kidding? Are you kidding me?" They said, "No, Hugh." He said, "You know what? We have a fan base that likes what you do, so we need to reward them with a very special price and the convenience, right? And when they have it, they got it for life. They got it for life." And they said, "Hugh, don't die on us." I'm not. I have no plans on going anywhere. All right. And even if I did, we got my cohort, John Johnson. Great guy. Great guy. So, Inner Circle, Day Trade Spy Signal, pick of the day, trading room. And for those of you who are new, don't know what I'm talking about, let's go quickly over this. The Inner Circle. What is the Inner Circle? The Inner Circle, this is where you get your morning market analysis sent to you every morning at 9 o'clock in the morning, Eastern Time. All right, gives you a flash assessment of where SPY is expected to go that day. You also get a follow-up report later in the day as to what we actually did. Quite involved, too. Actually, John prepares the morning market analysis, and we kind of split the afternoon. But he's very comprehensive. He loves to give a lot of great information there. You'll also be invited to our Wednesday night meetup. So if you have any questions, you ask them there. and it's all part of the whole inner circle thing. He answers all your questions, and you're also going to get first notice of upcoming events, unless we tell you here, like what I'm doing now. Again, contact Grant for pricing at GLINHRES at eaglepub.com. Next up, we've got the Day Trade Spy Signal. This is a particular option sent to your cell phone 3 to 5 times a week. Algorithm-based morning trades. They're all in the morning. This facilitates an immediate buy. You're going to put it up for sale for a 5% profit target. And if it's not sold by the end of the day, sell it on market close. Okay. Contact Grant. Next up, the pick of the day, another spectacularly successful, popular service that we have. It's a particular option emailed to you at 9 o'clock Eastern Time. Every day, as long as there's a trading day, you're going to get this. Not to say that every day is going to be a trading day. Every now and then, if the volatility is through the roof, we say, oh, hang on, not a good day to get in a trade. Wait till the volatility comes down. If it's going to come down soon, then we'll put on a trade. But we're not. We would rather that you not be in a trade wishing you were than to be in a trade wishing you weren't. Here's the danger when you get some really high volatility, extraordinary high volatility. That means your option prices are going to be very expensive. And this is and the reason we have to tell you that is because this is a hand-picked option that you're going to buy on market open. So if you're going to say spend $10 on an option and then they suck the volatility out of it, that $10 option could be worth $6 in no time. Now what are you going to do, right? You'll probably lose the $4 pretty quick. So that's why. But we give you both calls and puts. So you buy it right at market open. So here's the thing. Right at market open, wait a few seconds for the bid-ask spread to settle it nice and tight. You want those to be within 2, 3, 4 cents of each other. And then you're going to buy it. And if it's a call, you look at your 1 minute candles. If it's a green and you see the pressure of the upside, then buy it, right? If it's going against you, just wait until it turns back up, then you're going to get it for a discounted price. And you're going to put these up for sale for a 6% profit target, and they may be held overnight, if not sold. Now, recently, we've been talking about, well, a lot of people like these stop losses. They like stop losses. Personally, I'm not a big fan of stop losses. Excuse me. I'm not a big fan of stop losses, but we were told, well, you have to have some kind of a stop, some kind of an exit plan. So they said, put up a 40% stop loss. Okay. Well, we found that sometimes, not all the time, but once in a while, you would get the market going against you. The 40% stop takes you out. Well, now we got a loss. But before the end of the day, the market comes back, would have given you a profit if you held on to it. So we changed that policy the other day. We said, okay, strap the 40% stop loss. If you do not make your 6%, then determine at the end of the day, we're going to consider that you're going to sell it for the market price at the end of the day, similar to the signal. Okay. This will facilitate the option to breathe because especially these days when you get such wild market swings like crazy, all right? And you may also hold it overnight. There's usually ample time in these things to give it that room that if you have to hold it overnight, you can. That's the pick of the day. The trading room, which is our piece to resistance, is that how you say that? Hosted by yours truly, myself, Hugh, and John. John is expert trader. He's been doing this for over 20 years, teaching thousands of people, trading, former lawyer. I guess he's still a lawyer, but he's not practicing law. This is what he's doing. This is where strategies come alive every morning, 9:20 to 10:30. Strategies like our scalping strategy, our out of the morning gate strategy, our bread and butter strategy, the various things that we do. These are actually learn and earn sessions. They're interactive. You can actually chime in with a question, you'll probably get an answer. It's also exciting trading. We have a lot of fun. We teach what we trade and we trade what we teach. And again, you're going to get your questions answered. And we've been doing this live since 2010. As we understand it, this is the longest running trading room and must be doing something right. Again, contact Grant for any of these programs, by the way. And it's not just the Day Trade Spy Society, it's any of these programs, all right? And you're going to get them all right here for one special price. I know the people that have this, they really like it, and it's actually pretty cool. All right, I'm going to get to your questions a little bit, but I had a question earlier tonight. A gentleman emailed me in and said, Hugh, I really like it when you put up your trades. Show us what you did this week, real trades, not just sim trades. So I said, okay, I'll get those together for you. So I went back into my Thinkorswim platform, and I like to use two platforms for my really big trades. I like to use Tasty Trade because of the lower commissions. They cap commissions at $10. But I also use Thinkorswim because I feel that well, we're showing their charts. I should give them some commission money too. This is what I did this last week, folks. Real trades, real money. Now I didn't tell you. I cut out how many contracts because I don't want to put anybody at in any awkward feeling that I'm trading way more than they are or way less than they are or whatever. So it's not important how many options I'm trading in this particular one. But what's important are the results. My trade number one that came in, actually, I did not trade on Monday. I traded Tuesday. Tuesday was my first trading day. I picked up 20 cents in 4 minutes on the 562 puts right here. And at 595 out of 615. And that was a 4 minute trade. On Tuesday, another trade here. I did another trade on Tuesday and about a bunch here at 554. So 946. 9 minutes later, I sold them for 26 cents profit. And then on Wednesday, and trade on Wednesday, March the 19th, 655 sold for 680 in 12 minutes. That's a quarter. Then that was on the calls. I flipped over to the 564 calls. Got back into calls right here on the 20th. Did a couple trades in there. 37 cents in 2 minutes. Right here on the 565 calls from 941 to 943. And then another two trades here on the 20th. 24 cents in 7 minutes. 516 to 540 on the 570 calls. Yeah, I could have taken the 565s up even higher, but again, I like to go in, make my money, get out, wait for the next setup, right? And then one more here, picked up 18 cents in 35 minutes, same day. So what is this? We had one, two, three trades on the 20th, right? One, two, three on the 20th. A bit of a roll that day, right? Just over half an hour, another 18 cents. Now, let me see here. I better do this here. I better put a space. There we go. I'd like to make this nice here. Okay, on the 21st, which was actually Friday, I did a bunch of trades there too. See, I get on rolls. Some days I don't want to trade. Monday, whatever it was, don't remember. But on Tuesday, did a couple trades, and then got on a roll on what's this? Wednesday, Thursday, Friday. On Friday the 21st, picked up 43 cents in 1 hour, 19 minutes on the calls. These were all calls from here on out. 482 to 5 1/4. And another trade here, 6 cents in a little over half an hour. That was only 6 cents. I remember that. I remember the market went against me and I actually had to step out. So, well, I'll just, make a few cents on this. And it was for quite a bit of money. And I thought I'll be happy with that. Took it from 640 to 646 as the market came back in. And then this is the one I like here. Picked up a wild 14 cents from 606 to 620. Get this in 42 seconds. 42. These are the ones you really, really love, right? Where you're under a minute, 42 seconds. Okay. Folks, if this were only 10 contracts each, okay, only 10 contracts each, the gains would have been $3,930. $3,930. That's for the week, um, which translates to $204,360 for the year on 52 weeks. Right, if I'm only trading 50 weeks, we'd be at $196,500 for the year if every week was like this. Some weeks are better, some weeks are worse, if that's only 10 contracts. You're wondering what my average investment is. Oh, yeah, well, you put so much money into it. Well, you know what? My average investment was only $5,914. right? It takes money to make money. The more money you put in, the more you're going to make. I mean, you're not going to get rich. It's probably not going to happen. You're going to put $1,000 in and make, 100 grand a year, trading, three times a week type of thing, making, scalping. You have to put some money in it. But, you put an average of $5,900, less than $6,000 per trade. And the average time, by the way, in each of these trades is only 20 minutes. Now that includes the hour and 19 minutes. It also includes the 42 seconds. So we're not in there for very long. And this is what I like. I'm done. The latest I was done was 12:20 on Friday afternoon. 12:20. Normally I like to get in, make my money, get out, get on with the rest of my day. Yeah, there were some trades in there. This one here, 12:10. But most of these trades I was done by, 10:56. Another one, 12:10, 10:23, 9:43, 9:47, 9:55, 9:44. I like to get in early. See, I like to make my money early in the day. Get in, get out, make my money. Now, how cool is that? There. Okay. Now we're gonna open up the fireplace, get some questions, and let me scroll through the questions, folks. Bear with me while I scroll through the questions. All right. Da, 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 da. Wow. Okay. All right. Where are we going here? Okay. Yes, Mike, you've changed the stop loss guidance for the pick of the day. Okay, so yeah, so what we're doing there for the pick of the day, you'll notice that is that instead of using a 40% stop loss, just take the market on close, and chances are you'll probably have more winners. Or the 40%. If you really feel by, 3:30 the market's you're down 40%, it doesn't look like it's going to come back up, take the 40%, but it's unlikely you're gonna get that. We found that actually gave you a much better rate of success if you hold on. Yeah, we had a situation during the week. I think it went down, stop took us out for 40%, so we had to record that in our records, and regrettably so. But then the market came back and was giving us a really good profit. Oh man, really? And by the way, we teach you how to make a lot more than 6%. We only use 6% as a guidance as to point of profits. So. All right. Do you still have any ebooks out there, Daniel? Yes, we do. We have ebooks, and if you give customer service at DayTradeSPY an email asking for ebooks, they should be able to give you some ebooks. Or if you email me and ask specifically what you're looking for, if you're looking for something, we could probably dig one up for you. You know what I'm saying? So. I think it's time to revise some of those, and a lot of that kind of thing is turned into videos and stuff. People like videos more than ebooks. Um, Teaching people how to day trade options is more of tactile feel, visual, audio, rather than trying to read it with the written word. But we have the same there. All right. Da, 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 da. Okay. All right. End of the day close. Permanent change. Howard's asking if that's a permanent change. At least for now, Howard, it is a change that we're implementing there, and we're trying that as just to try and better the score, if you know what I'm saying. Okay, let me scroll down and get some more comments here. All right. Oh my gosh, I love these polls. People are really excited about these polls that we throw out there, and by the way, if you have any suggestions for polls, let me know and maybe get it up there. So, okay, okay, John McKay. Suspect a lot of folks on here are in a position to manage that the fluctuations are occurring in the market. Hard to believe most are like trade like me, not just stumble on a day trade spy. So what I like about day trading spy is that we can make money both going up and down. You don't need much of a move to make some money. And with our setups, now there's no indicator that's going to tell you, you know, where it's actually going to go. But we have enough indicators that we had figured out through the series of indicators and the patterns and different things that the setups provide for us that there's a very strong likelihood of the market going in a direction that we anticipate. we've been doing this long enough that we've seen an awful lot where this happens. And I get this a lot where people will email me in the morning. Let's say our pick is a call, and yet the market has just tanked 5 points or 6 points or 8 points or something. And say the email is, Hugh, are you crazy? The market's going down. And I usually don't have time to respond to them in the morning. But I have on occasion written back to them if I have a few seconds, say, let's have this conversation later in the day. I look to see where the market is going to go, not where it is or where it has been. So there are days, a lot of days when the market tanks like that in the morning. I'm thinking, yes, 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 this is good. This is good news because I could see the market finding support and going back up. Okay. All right. What is the type of order that you have to sell at a certain higher price or at a lower price? I like to use limit orders. I always like to know the minimum that I'm going to receive when I sell an option, or the most that I'm going to pay for an option. Now, these limit orders, that is a price, okay? That is the best price for me. Oftentimes, I will actually get filled at a better price than the limit price. Better for me. So sometimes if I have a sell order for say $5.25, I may get filled for 5.28, 5.29. Okay. All right, a lot of these questions. Okay, how do we use the pivot bar when trading options? The pivot bar, pivot points, I show that in the trading room. Pivot points act as strong support and resistance levels, kind of like magnets. They are just another level of support and resistance here. Da, 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 da. Matthew G says, I have a good time when I'm making money. Yep. Phil T, did the 320 put trade recover later? I believe it did. I don't have those numbers handy here, Phil. Do you have any free trial periods? Jay, good question. Do we have any free trial periods? Okay, so the shorter answer is no, but the good answer is this. You can actually subscribe, say the trading room. You can say, and I really highly recommend this if you're on the fence. Subscribe to the trading room, and you have 30 days in which you can cancel. And it's not a problem. You simply call them up and say, I tried it, I didn't understand it, whatever. I don't like it. It's not for me. It's too fast, too slow, too whatever. Doesn't matter. You don't even need an excuse. I just want to cancel. And they give you your money back, just like that. They give you your money back. Um, so it's actually pretty cool. It's actually pretty cool. But I will suggest this. If you are in the trading room, it's a good idea to give it a really good shot, at least a month, because there are going to be some comments in there, and you're not going to necessarily pick up the flow, okay, right away. All right, especially if you're new. Ask the questions. We'll answer your questions. Just sit back and study and learn. All right, and you will eventually pick it up. It's kind of like I don't know if there's any pilots out there when you fly into you fly into New York air traffic, right? It's very busy. You're listening on your radio and it's bang, 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 bang. All these radio calls. You're saying, "Oh my gosh, how can I ever learn this?" You will pick it up. You will hear certain key. When they ask for your call sign, right? And you'll right away pick up and you'll listen and you'll remember it. You'll focus and know where your spot is in your queue. And that's the way it is like this too. So even though you're not going to understand necessarily everything right away, over a period of time, you won't even know what happened. All of a sudden, you're just gonna, oh my gosh, I understand it. I understand what's going on, right? So, okay, okay. What can we study in addition to lessons learning in trading room, training resources? Daniel, we have training resources. In fact, I'm going to tell you. Um, oh, I'm not supposed to talk about this yet. Watch for your email. Watch for the announcements. There is something coming up, I believe, in April. Okay, a really cool trading program in April. All right, can't say anymore. That's on the schedule, so just watch for that. So, all right. Do you have any monthly plans? You'll have to check with customer service at DayTradeSPY on any monthly plans. I don't believe so. They do have plans for I think quarterly, so you can buy things quarterly, which is pretty good too. A question, Douglas, is there a limit on how many options I can sell? I believe you can sell whatever your account can manage. If you're selling options and then whatever's balances in your account, how many you can buy. Um, you are limited by your account balances on these things here. Grant's email. Can I post Grant's email again? Yes. Okay, I will get Grant's email back. Okay, let me get that back here. Good, good. That's a good comment here. Okay, I'm going to post Grant's email. There it is right there, folks. All right, check with him. And again, if you are subscribing to anything that you may already have, he will make adjustments for that. Okay, so you might want to check up on that. So, all right, on 10 contracts, 3,900, how much of this is used to pay for option cost? Okay, good question from Alan. That $3,900 that posted, that would have been the profit. My options, excuse me, is accounted at $1 a contract. Okay, so $1 a contract is what I would be paying for that. So I believe I had nine trades. Nine times. What would that be in options? It's 10. It's $1 contract. Okay, in reality, using Tasty Trade, if you go more than 10 if you trade 100 contracts, your commission with Tasty is $10. Okay, so if you're trading heavy, go with Tasty, and you'll save a lot of money on your contracts, right? So let me see what's the next question here. Uh, okay, if I'm buying $40,000 worth of options, will they be all bought immediately or all broken up into multiple sales? Okay, if you're buying $40,000 worth of options, you'll probably be filled in chunks. So you'll see a whole bunch of chunks, but you're only going to pay one commission. But as they fill, you're gonna, might say, 100 contracts here, 200 there, 50 there, 75 there, that kind of thing. So, uh, okay, if you trace 10 contracts, you'll make 2130. Somebody says there's a mistake in my calculation. Let's go back to the calculation. If it's 10 contracts on 20 contracts, I will have made $200, right? $200. So let's just add this up. If there's a mistake, I want to catch it, right? All right. So 20 plus 26 plus 25 plus 37 plus 24 plus 18 plus 43 plus 6 plus 14. That's 2113. Wait a second. Did I make a mistake, folks? Yikes. Let's do this again. Where did I get these numbers from? 20 plus 26 plus 25 plus 37 plus 24 plus 18 plus 43 plus 6 plus 14. 2113. Oh, thank you who said that? Alexi said that. 2130. My goodness, what am I doing here? That's 2130. 2130. Okay. Which is 2130. And if I trade 50 weeks a year, that's still 106,500. That's more like it. Okay, let's go back and get this correction here, folks. There is the correct, there's the correct number, 2130. All right, 2130. And I stand to be corrected that way. And Alexi, for catching that, I need to write your name down here. I'm going to send you an ebook. I'm going to send you an ebook, Triumphs and Tragedies, Alexi. All right. I will send that to you right after the session here for noticing that error. Thank you so much for that. All right. I love it. You guys are great. All right. Da, da, da. Okay. Thank you for that, Scott. I will consider that to be a poll suggestion. Let me write that down. Okay, fan. Okay. Okay, that will be for a future poll. Thank you for that, Scott. Scott, by the way, is in our trading room. Does very well. It's actually very, very good. So, all right. Oh my gosh, the time is 9:20. All right, ladies and gentlemen, thank you all for joining us. I'm gonna let you go now. Have a wonderful evening. It's been a pleasure. See you in the morning.
Ain't no stopping now. You're the one. Shine brighter than the moon and the sun. Be great at what you do. Give it all of you. And trust the process and keep your eyes on the prize. I can tell